please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Ashwani, one more question. If I am determined only to buy NBFCs or play NBFCs, which would be a good long play?
You know, this will be very similar to what we saw when crude fell from 100 to 60, although that was a bigger move. But, you know, this can be a multi-day move. So all sorts of housing finance, the smaller guys who haven't had a big rally, but not as much Bajaj Finance or Bajaj Finserv, which are already at highs. Because my sense is Canfin, Home, etc. now having a lot of short positions. So basically any sort of REC, PFC, the beaten up guys, they are likely to go, you know, 7, 8, 10%, those sort of moves.
All right. Well, thank you very much for that. We'll, of course, come back with a lot more questions. But there are a lot of brokerages which have come with some strong views on some stocks. Sonal and Abhishek are here to line up some of the reports that we thought are interesting. Sonal, you go first.
Thanks a lot for that, Lata. Well, a lot of positive brokerage action coming in on a lot of stocks. I'll start with Trent. Jefferies has upgraded the stock to a buy from a hold. They've also increased the target price to 400 versus 360 earlier. What they like about the company is that Westside and Zara are witnessing a gross margin expansion of around 300 to 400 basis points, and also they like the management comment on increasing and expanding the stores, so that is something they like about the company. Edelweiss is also bullish on Coal India. They have upgraded the stock to a buy and the target stands at around 325 rupees per share. They say that the current valuations imply favorable risk reward matrix. Also, they are immune. The company is immune to macro concerns as it is a pure domestic play. That is what they like about the company. Jefferies is also written on HEG. They met the management. They have a buy rating on the stock with a target price of 4,400 rupees. The major management takeaways were that they expect the realizations to remain robust. Also, demand for graphite electrodes within China is expected to increase. Also, they are looking at different avenues within carbon space for cash utilization. So that is something that will be positive for the company. Back to you.
Okay, Sonal, thanks so much. Yeah, Jefferies has been the original big bull on graphite and HEG, and you must give credit to them. They really called it right ahead of others. But Abhishek, you're watching out for some calls that have come in on insurance companies?
Well, Surbi, Motilal Oswal has written on insurance sector. Basically, they have written on the new business premium growth that has written for private players at 15.5% for the month of June as against 5.5% in the month of May. Now, this growth was largely led by unlisted players like Birla, Tata, Kotak, Max, etc., PNB Life, for example, while the listed players like SBI, ICICI Pru and SDFC Life have shown tepid growth in this current quarter. For the industry as a whole, the new business premium growth was at 5.6% in June when it compares to 8.7% in the previous quarter. However, they expect the new business premium growth to be at 16% for FY19. So expect a bit of red on these listed players.
Okay, thank you very much for that, Abhishek. We will try and analyze that report with some insurance companies as well. For the moment, let's invite the first corporate guest on the show. Minda Industries stock is trading near record highs. The company posted a strong set in Q4. Of course, the Q1 numbers are not out. So what are the early trends for FY19? Let's invite Mr. N.K. Minda, Chairman and Managing Director of Minda Industries. He joins us on the phone line. Good morning, Mr. Minda. But just give us a feel of how the first quarter has been and how FY19 is likely to look like, because your Q4 really set our expectations on fire.
So the industry, you know, auto industry as a whole, in all segment is growing, and fortunately we are engaged with all the segment, whether it is PV, passenger vehicles, two-wheeler, CV, and off-road. So all the four segments are growing, you know, much more than the expectation. We were, in fact, expecting 10 to 12% growth, and now the growth is almost 15 to 20%, varying in the different segments. So along with this segment, we have to grow because of the market share. You know, we are getting new orders of the new models and all that. And top of it, you know, we have added new products, which is now reaping the benefit, you know. So they have started capacity utilization, mode of capacity utilization like speaker, alloy wheel, and sensors. So these have now, with the new regulations, they have the intake is more, the application is more.
Mr. Minda, if you can just broadly give us some directions. You know, last year, full year, of course, Q4 was extraordinary, but the full year growth was what, 30%, 32% in revenues. Should you do better than that in the current year?
See, our target is, let's say, 25% growth year on year. So that is our target, and I think we should do better than that.
Mr. Minda, sir, you've also undertaken a lot of consolidation. There's been a fair amount of restructuring. You've merged a lot of companies with yourself. Where does the capacity stand now with all these mergers coming in, some joint ventures? Where are you with respect to your capacities? Are you nearing full capacity utilization? Is business that good that you might look at even adding capacity in the coming months?
As far as the present, the mature businesses are concerned, we normally continue to increase capacity. That is why our capex are already 350 to 400 crores. And as far as the new capacity addition is in Gujarat, as we all know that Gujarat Maruti is planning to produce 750,000 vehicles in the near future. So we all are required to set up the capacity there, particularly the heavy items where the transport cost is more. So, and otherwise our capacity utilization is around to the tune of around 80-85%.
So, sir, just a follow-up question on that. You said that 400 crores of capex has anyway been penciled in for this year. And Gujarat is over and above that, or is it part of the 400 crores that you'd be spending this year?
No, is overall.
Okay, all right, Mr. Minda, there is a premiumization, and one can see that even in your products, whatever it is, LEDs, advanced driving assistance systems, alloy wheels, telematics, wireless changes, airbags. Are you looking at a secular improvement in margins because you are selling higher value products?
See, the volumes, the margins will definitely be better, but not that high because the capacity utilization will be much lower in the beginning,
All right.
Because the capacity, as long as going along as we add the more uses, it will be there. So definitely the profit margin will be higher.
Okay. You I think did 11.9% as a whole for FY18. Do you remain around that levels in FY19, or does it change?
Some percentage point better, I would say.
Okay. It will be better.
I was just talking about MRPL, which is one of the subsidiaries of the company now on. If you could just give some color on a lot of these entities that you've integrated, and now they're all your subsidiaries. MRPL and Uno Minda, I mean, all of these are, strong margin generating companies. Will they add to the overall margin profile?
Of course, yes, because four-wheeler is in all the segments, four-wheeler profitability is always better than the two-wheeler. And so I think it will add the value to the consolidation and the overall result, our Mandalika consolidation.
Okay. Any plans on the electric vehicles business? How does it impact? How does it provide you an opportunity? Are you investing with electric vehicles in mind?
So we have already mapped all our product line, and all the product line, we are affected only in one or two lines with the IC engines to EV engines. But as I must tell you that today we are around 3.45 million vehicles in the country, which is going forward. We are going to be 10 million by 2030. Even if we take 30% of the EV, still we are going to be double in the IC engine. So I think nobody should be worried about the EV coming in.
No, I'm not worried.
That is one part. And the second part, the opportunity in the EV, there are ample number of opportunity, and then we are also, mapping about our synergy, what are the synergies with electronics, the body control modules, the sensors. So there are any ample number of opportunities. So we will definitely be taking those opportunities apart in our group.
So finally, sir, since business seems to be firing on all cylinders, it's a bit of a cliche to say that, but I can probably use that with you over here. Would you be looking at raising any money, or this 400 crores of capex? I'm guessing that includes whatever you're spending on EV and R&D as well. Will it all be met via internal accruals?
I would say in going forward, not in the near future, in next 1 or 2 years. I mean, we are managing with our internal accruals and a little bit of debt. And our debt is quite good as of now. It is 0.4. So we have ample, opportunity and gap. At least our policy is 1:1 debt, but we are 0.4 as of now. So we will manage in 1 or 2 years, and later I can't tell you as of now.
Of course. All right. Visibility for 2 years is more than enough for investors, I would think, at the moment. Thank you very much, Mr. Minda, for joining us this morning with your view of how FY19 and 20 may shape up. We have to take a break. On that note, we've got F&O trades lined up for you with Manoj Muralidharan of Religare Securities. Also, Deven Choksi of KR Choksi joins us in a minute to give us some analysis of the earnings season. Welcome back. It merits perhaps looking at the Asian index and the SGX. It's not always the right bellwether as to how India starts, but today there are a few things going for India. Asian indices doing extremely well, so clearly the trade tensions, the $200 billion of goods that will be attacked by fresh tariffs have been taken in their stride, at least for the moment. So the affected countries themselves are seeing their index go up. So a safe haven like India definitely benefiting. At the moment, it's only 0.3 up. The Asian indices are up over 1%. And separately, of course, must put the dollar index as well. That's a little strong. In spite of it, you're seeing a fairly strong Asia over here. Let's just remind you about the other things that we have been tackling today. The big news that we got yesterday, or the big view, was from the outgoing Chief Economic Advisor, Arvind Subramanian. He spoke rather strongly about public sector in general and its inability to take decisions because everything is suspect. And he spoke about PS, Public Sector Bank, lending itself, which has become toxic. Listening to some strong words on the issue from the CEA.
The public sector is just enormously handicapped in terms of their ability to recruit, So public sector banks really don't have very good risk assessment capability. We have found in the last 10 years with this that public sector lending to private sector lending is so toxic. Getting out of it is so difficult that we don't want to repeat this going forward. The oil windfall, I think, broadly went into deficit reduction, which is a kind of, I would say that's a kind of building, thing for the future. And, the public investment expansion that happened, and some other expenditures, like you said, the pay commission. So I think broadly, these were, the pay commission, it is what it is, you don't control that. But in terms of the use of money, I think deficit reduction and public investment increase, I think are not at all unreasonable ways of spending a windfall.
All right. Well, right now, let's shift focus to the big story of the morning, and that remains the huge fall we've seen in crude oil prices. It seems, Manisha, were the crude bulls at your birthday party? Is that why there was no participation? We saw the big drop in prices.
Well, only if I can take credit for that. Why not? Well, yes, a 7% decline in a single day for Brent and 5% down for the US crude is a single one-day decline in 2 years that we have seen come in. And as you guys were talking earlier, the reasons have been quite strong. One, of course, is that the US is softening its stance on some countries, will exempt some countries, is looking to request from the request on the Iran sanctions. The other, of course, is the $200 billion worth of tariffs yet again going to be hitting China from US. So that trade war really seems to be intensifying. And then apart from that, Libya opening up its terminals to start exporting yet again has been, that means that more supplies will be coming into the market. But the major reason clearly has been the money moving out from here. So the speculative longs had been unwinding yesterday, and that number is quite huge, and that led to that sudden fall that you saw in the crude oil prices yesterday. It has clawed back by a percentage point in Asia right now, and that's clearly because the US inventories fell by 13 million barrels on a weekly basis, and that clearly has been supportive for those prices in the near term. One quick word on the metal space. You have gold prices trading at one-week lows. Zinc and copper are meandering around those one-year lows as well. But there is an uptick that you have seen come in for the Chinese steel prices. That one is at a 10-month highs after the pollution crackdown seems to be supporting that.
Okay, well, thank you very much for that, Manisha. I have a different theory, Surabhi. I think the big gold and crude bull is the one we are speaking to. She was partying, and that is why the bears had the upper hand. All right,
even
Manisha.
Better.
All right, Manisha, thank you very much. I'm sure we are going to need your assistance all through the day today, tracking crude prices and reassuring ourselves that we have this good thing going. Okay, with that, let's shift focus to the derivatives segment. Manoj Muralidharan of Religare Securities has joined us now. Good morning, Manoj. Thank you very much for joining us. Well, first up, we're all wondering if crude is going to make a major dash for the bulls. Would you be a Nifty bull today?
Good morning, Lata. Lata, I'm not really sure about that. But then when we started this contract of July, and maybe the last 3 to 5 sessions, if you see the quantum of open interest which both the indices, your Nifty and Bank Nifty, was carrying ahead for the next day trade was a good 6 to 7%. Now, yesterday the Nifty could manage hardly 3%. Needless to say, it was the Bank Nifty which was which has witnessed good distribution, and we believe that there is some profit booking which has happened, and this being the weekly expiry, I guess we might enter into a consolidation of maybe 160 to 180 odd points. So a better strategy wherein you can get at least a 40 points premium as profit. You sell at 27,000 call option for today's expiry, try and sell it around 25 rupees. Combine that with a 26,600 put option, that also 25, so that you get a premium of 50 rupees. The stop losses should be around 40 points just ahead the strikes, and we are expecting a target of 10. Now for the Nifty, I believe the support or a prudent level, or the so-called volume weighted average price concept that we work on, the levels are 10,860 on the Nifty future. So if I get a Nifty future close to 10,860, I would be buying there, because Lata, I believe this month of July, I guess if you remember the expiry interview that we had, if there was a VWAP, we were expecting the Bank Nifty, the July could have been a 4.5% month. Now the upside potential for the Nifty is all the way to 11,280 to 300. Now we are still, let's say 50% of the up move is done. So at 10,860, again, if the indices finds good support, and if you see the PCR is always at 1.12, we believe that there is good buying which is happening at least in the index stocks. We might get into the second leg of that, but before that we might enter into a consolidation of maybe 3 to 5 days. The VIX is at a good 13.5. So the better strategy here for intraday would be to sell the options for Bank Nifty, try and buy the Nifty close to 10,860. The target should be around 11,100 on that.
Okay, Manoj, hi, good morning. You have a couple of stock calls as well on HUL and Infosys.
Absolutely. Good morning, Anuj. Anuj, I guess Hindustan Unilever, if you see, we believe that the levels of 17 to 1740, that is the level where distribution has come in, and the stock might get into the levels of somewhere close to 1620. So the better strategy, because if we the results are around the corner, so we might see the IVs of just out of the money put option, which is your 1660 strike, to go up. So the recommendation here is to buy a 1660 put option. You get it around 14 to 16 rupees. Keep a decent stop loss of, let's say, 10 rupees on the downside, so that goes to 6. The target should be a good 40 rupees. So we are expecting a break even of 1660 or to 1640 on HUL, which happens to be the weighted average price where we might see some support. Infosys as well goes with the same story. We believe that somewhere close to 1340 to maybe 1380 is where we would recommend selling that. Now the reason here is obviously we have seen yesterday TCS rally after the results, but if you look into the net open interest quantum which was being carried from the month of June to July, we believe that Infosys is more into a distribution zone. So 1335 is where we recommend selling it, 1358 as a stop loss, and the target is somewhere close to 1260 on the stock.
All right, Manoj, many thanks for joining in with all of those trading strategies this morning. Well, now let's move over and talk about some of the important macro data points that we will look at today. We'll get in the CPI numbers. So let's bring in Ekta to understand how this print could read. Ekta, a 5% increase. I mean, 5% growth is what we're looking at in consumer inflation?
Yes, it is expected to harden to over 5%. The consensus that CNBC TV18 is going with is that it could come in at around 5.3%. That means that it would be around a 20-month high for the CPI data this time round. The key factor to watch out for would definitely be the core inflation data, because that was the negative surprise last month. It hardened to levels of around 6.2%, and for this month the street is expecting it to probably come in at around 6.2 to 6.3%, with some estimates on the upside of at around 6.5%. Also, we'll be watching out for the impact on food inflation, expected to be above 3%, as well as the impact on fuel prices because of the price hike that took place for diesel as well as petrol.
Okay, thank you very much for that, Ekta. Yes, 5.3, and perhaps when we come to July, it could even be closer to 6%. But I think the market will take it in its stride because it's largely known. It is the MSP and its impact which is the unknown and which will have to be tracked. So I don't think 5.3 will set a cat among the pigeons. On the contrary, it will be a positive run for the bond markets today because of crude.